Robschild, no advice. I'm gonna try to do a shorter version of the show. This is the second time I recorded the whole thing. Apparently half the show I had the pause button on when I was recording and the pause button off. Anyway, let's just do it. Today is Tuesday, February 25th, 2025. Today's episode, 10 year, 3 month at zero. Fairly significant update. Remember, every time that we invert in the 10 year minus 3 month treasury, below this black line, which is zero, whenever the Fed is strangling the economy hard, this goes below zero, and they wait until they see the economy slowed down enough, and then when it uninverts, we get a recession every time. Inverts, uninverts, recession. Inverts, uninverts, recession. Inverts, uninverts. Yes, even the COVID crash that occurred. We recently, after an extreme period of inversion, uninverted on Friday the 13th, December 13th, 2024, and today we are back at zero flat. If this does get back into negative territory, then we're back into the status of the Fed strangling the economy, trying to slow it down because it's too hot. So I guess if PCE data comes out hot on Friday, that might confirm it. I have my suspicions that this might be a bounce off of zero. I have my strong suspicions that this might be the part of the cycle where we start getting more aggressive, faster cuts from the Fed imminently at this point. But, remember, that's just a crystal ball reading. Notably, today, consumer confidence came out at 98.3, lower than the expected 102.3 and lower than the previous 105.3. Looking at this graph in a chart, you can see when it goes down, that's during a bad recession, and we're sort of holding the line right now at the very lower range of the past 4 years or so. If this continues down, that's another continued red flag that, yeah, this is it. This is when the gray bar starts getting filled in and we have our recession or depression or whatever it's going to be. Remember, Wednesday, 12 p.m. M2 money supply report for January comes out. If this is like negative, that would be also like a huge warning. And you'll see the Fed funds slammed to the ground. You'll see all rates slammed down. It could rock things, and they'll say on the news it's because Nvidia's earnings came out really poorly. Maybe. I mean, again, that's like maybe a crystal ball rating there. Nvidia is we'll call it the godchild of the AI industry. I mean, if people aren't still loading into and getting their hands on every little AI thing they can still, that could pop. That could be the big evidence that really pops the AI bubble. I recently saw a headline talking about how Microsoft is ending leases on AI centers. We don't need as many, it's not as profitable as we thought it might have been. Who's been saying that for years at this point? I've been using AI for free. Where is the profit supposed to come in? I don't understand it. Show me how it can make money and I'll be interested in investing in it. Look out also Thursday, the M2 money supply velocity comes out, and then Friday, Fed favorite inflation gauge PCE data coming out. If it comes out too hot, then the Fed, they supposedly can't, cut rates strongly. It'll be interesting if they feel forced to cut rates while PCE data is still strong, but who knows? Maybe this is the end of everything, the end of the inflation, the end of speculation, and the end of the final end of this insane bull market that we've seen with PE ratios just getting way out of hand. I mean, even like Walmart, Costco, everything. It's a giant bubble, housing bubble. Everything's in a bubble right now, by the way, which is why I'm not touching anything that I see as being in a bubble at the moment. No changes in daily reminders. Watch macro update 21125 to hear me explain them. And for crystal ball ratings and the Robschild portfolio, watch portfolio update 21125. Onto the charts, SPX, the S&P 500. I had this, I drew this line here showing from Friday, September 6th, connecting to January 13th. It looks like that's where the buyers came in today to save the market from falling further. Closing only, a 0.5% lower. It looks worse than it actually is, really, as a candle here. So we could get a bounce. We could go up here in the S&P 500. I have no idea what Mr. Market's going to do right now. Equally in the VIX, it looks like we could have even had a top in the VIX today with this large wick on the top of this candle here. Not to say that it can't continue higher, but we've lost the bullishness in the VIX as of today. The run to safety continues as the Treasury note, 10-year Treasury note yield dropped pretty heavily today, 2.16%, finally meeting the target of this head and shoulders top that I drew and figured out a long time ago. It played out like clockwork. Many professionals probably bought TLT on February 4th, and they would have sold it today because that's the target of this pattern, and that represents the confirmation candle. Although some people may have gotten squeezed out of their yield short, we'll call it, when we popped back above it, but there was no confirmation, so yeah, went down to the target as expected. And then chart pattern wise with TLT, this parallel channel we've been in, this was a large breakout to the upside, suggesting this might even be one of those jump over the river things we could potentially see because of this pattern here, TLT to continue strongly to the upside. Can't help myself, I have to gloat about it. When I saw these 4 candles back here, you can watch February 9th show, I was talking about how odd it was to see opening and closes so incredibly close at the 96.5 thousand level in Bitcoin, and then we've had openings, closing, opening, closing, opening, closing, all in that range. So many candles, just a spring winding up. I literally almost missed buying my strangle right at the end of the day. I won't make that mistake again. Next time I say I'm going to buy a strangle, I'll make sure to get it before the close. Right after the close, Bitcoin just crashed. My strangle would have performed marvelously. And then, today's candle was here, and we hit this line that I had drawn previously. This isn't a candle from today. I had this here before. It connects December 5th, 24 to January 13th. And I drew this parallel. That's how I came up with this channel here. So we kissed it today. Buyers came in aggressively for now. My take on it is that we are likely to go back to fight in the middle and then decide if we're going to head higher or lower. I was thinking this would wind up to break out of this, but because of Monday's candle not being as big as I thought it was going to be, we're still within this range the way I see it, although there are some professionals that see this blue line as the flat support line that we've broken, and they see Bitcoin is being bearish. So it could be a thing where we at least bounce off of here, maybe, and see what happens. Are we going to fight here to try to break back into this range and then stay in this range? I don't know what Bitcoin is going to do. Notably, oil still headed down to this major trend line going back to 2021. Let me show you that better. May of 2021, hitting this level many times. We're headed straight back down there. With the yield curve showing like it is at 0 right now. It's flat between the 10-year and the 3-month. I think emergency cuts are coming, like real soon, like this month, like maybe this week. I don't know. We'll see what happens. But yeah, oil falling. Remember, once we break below this line, there's not a lot of support going all the way down to like the $35 barrel on oil. It's when the fear of inflation is really gone and people start wondering how bad the deflation is going to get. And if that occurs, as I've been predicting with my crystal ball, bonds will go to the moon. I brought up on yesterday's show comparing gold to tips, treasury and inflation protected securities, how they kind of opened up this, like, these jaws. And I said, you know, either bonds need to go up or gold needs to go down, or both need to happen. And that's what happened today. This red candle represents today, engulfing 4 days. We had gold go down and bonds go up. Notably, copper got a very big bid today. The green candle represents today. I thought this was like blow off top and it was just going to go straight back down today. Dr. Copper getting a big bid. I have no idea what's going on here with Dr. Copper. He's smarter than I, though, so, you know, better watch out. And then silver, sort of halfway between copper and gold, you know, being semi-precious and yet also an industrial metal, also going to the downside with gold. I think this is another alligator chomp thing. You know, copper's been massively undervalued compared to gold, relatively speaking, as I showed on a recent show. And so maybe, you know, some things are just sort of like getting back to normal in a way. You know, the S&P 500 cooling off, you know, maybe, you know, these enormous price earnings ratios aren't actually worth it. You know, maybe gold way up there in the sky, maybe it's a little too high. Maybe copper, relatively speaking, has been in the dirt, and along with treasury bonds finally getting a little bit of a bid, things are like, I mean, they seem to be normalizing, is sort of what I'm getting. I wanted to also note the CNN Fear and Greed Index is in extreme fear mode. This can sometimes mean, okay, this is the time to buy the dip. So maybe Mr. Market will drive it higher, and the unnormalization, the craziness will continue. I don't know. The craziness eventually has to end, the way that I see it. Anyway, last chart of the day, K-Web. I mentioned yesterday that this, let's clean it up a little bit. I mentioned yesterday the big red candle here, that it looked like that it wanted to do a gap fill, which means fight in this previous zone that we kind of hopped over. That happens oftentimes because nobody got to fill their orders. They didn't get the buyers didn't get to buy, and the sellers didn't get to sell. And yeah, today's candle proved me right. We are in the battle zone. We had a fight today in this little tiny range in the gap fill. That's how gap fills work. Now what happens once we fight here? Will we run out of sellers and go up, or will we run out of buyers and go down? I'm not sure. All I know is that I think these stocks are undervalued, so it makes sense for it to go up to me. But remember, folks, I'm just a guy with a crystal ball. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.